Good morning everyone, happy Thanksgiving. Today's video we are going to go over mastering the basics of day trading, that being just the basic confluences like fair value gaps, inverse fair value gaps, liquidity sweeps, break of structure, change of character, and what was the fifth one? Or the sixth one? Order blocks. Yeah, I don't use order blocks, so I'm kind of blanking on it, but I know that it really ties into all these other confluences, and if you're able to use them, you should. I think they may not be necessary, but it kind of gives you a better understanding of like the whole picture that's being shown to you on the chart. So I'm going to give you guys a couple examples with this London session that happened yesterday. Let me see. Here we go. So during this London session, we have a session starting out just kind of, just in the middle of, let's see, above Asia. And Asia clearly consolidated a lot, so London's going to manipulate that. So here in this price action, we have the chart sweeping high, creating a high after 40 minutes of being open, and then starting to dump right after. What you would call this is when it creates a higher high and keeps on going higher, you would call this a break of structure. So anything that gets past, let's say, this point right here, if it got past this point and went higher, that's a break of structure. When it broke structure right here, it started forming new highs and new highs. Now, there are four confluences that I like to use when entering a trade. I like to see, one, a break of structure, which is going to be, it's going to be this right here, because it was a previous high. It broke the structure, break of structure. Two, I want to see liquidity grab. So it just broke structure up here, so now it's grabbing like all of this liquidity up here. Three, I want to see either a bullish fair value gap that's being retested and continuing in momentum, or an inverse fair value gap that's being retested and continuing in momentum. So, you need your confirmation, and that confirmation will be the retest of candles like this, or candles like this. That's what I'm using right now to kind of like show you that the confluences work and that the trade is going to go your way. So if we take a look at the 5-minute time frame, really you can look out for, you can either play like really safe and wait until this 5-minute bullish fair value gap candle gets inverse. So it gets inversed at this point right here. So as soon as this red candle dips below that, you know that, okay, there's a change of character. There's an inverse. This is an inverse fair value gap. This right here would be an inverse fair value gap, and that shows you the movement and where it's trying to go. So that's like four confluences already. All right, you have break of structure, liquidity grab, and liquidity sweep at high, whatever you want to call it. Inverse fair value gap, and then on the 1-minute time frame, you can see that this inverse fair value gap is being retested. So I go on the 1-minute time frame. This inverse fair value gap is clearly being retested and completely shut down. Meaning the inverse fair value gap is valid, because this isn't continuing upwards and invalidating the inverse fair value gap. So those are your confluences for your entry. I usually enter on the 1-minute time frame. I don't usually wait till the 5-minute where it's completely like blown it out already. If I see like a clear confluence where there's a liquidity sweep or a break of structure, and a break of structure, and like the second I see this first retest and it's failed, that's where I'll probably enter like right about here. Now this trade works. Why? Because one, you have all these confluences and you can kind of assume where the market's going to go. I don't like ever saying predict where the market's going to go because of the fact that you can never predict the market. There's a probability on where your setup's going to land, but it doesn't mean that it's always true. For example, there could have been like down here, okay? So you see like, okay, it just swept liquidity up top. Now it just rode down here and it got inversed right away. Well, not right away. Like I said, it took a while, but it got inversed like right here. And it started riding back up again. You don't know if it's going to retest for another liquidity grab or liquidity sweep up high. I've seen that so many times where it retested again and it started falling right after, which, it does that. But point is, when you get in a setup like this and you're at a point where you can take a good setup and you can take good profit, you should take it. You shouldn't get greedy and, let the trade ride out and then get fucking full ported because you don't have a stop loss or some shit. Or you just, or you don't even have it break even. So even after all of these confluences right here, which means that there's liquidity sweep, break of structure, retest and confirmation, and an inverse fair value gap is being validated. After all of that, I'd probably enter right around here on a short position. Is that yeah, on a short position. And I'd probably just keep my my stop loss on the most recent inverse candle or something like this. I'd probably keep it like right here, so you're not losing too much. We also know that this retest failed, so it shouldn't have another reason to go back up. I know that there's a wick right here, meaning that it tried, but it didn't hit your stop, so that's a good thing. So I kept it right here. I guess like the 5-minute candle right before it actually fell. Look on the 5-minute. Yeah, I'd probably just keep it at like the last something like up here, or just wherever I found on the 1-minute mark. That's fine too, so you're not losing too much money. But yeah, that's where your stop loss would be. You take profit however your ratio is going to be. I usually use like a 1 to 2. I mean, lately I've been using a 1 to 1, but that's just because like I want my probability to be as high as it can get. So now I'm changing up to 1 to 2. So it incorporates, even if I lose 2 trades and I win 1, I'm still at break even. Wherever you want your stop loss to be, this is a good setup, so it'll hit. Don't be fucking greedy and have it all the way down in like 100 fucking ticks or some shit. No, not 100, like 1,000 ticks. Like holy, like if I go all the way down here, like listen, I know the trade rode out all the way down here, but how sustainable can you actually be having a TP that far down? All right, this setup, you want to have good risk management on your setups, meaning that if you're going to have a long tick profit, you should be trailing your stop loss, So, okay, well, if it goes down here, I'm going to move my stop loss to something like right here. Or, if it goes down here again, I'll see that retest. I'll move my stop loss, like, down to here. And, even if I get stopped out, this alone is still like, on NASDAQ, this is like, this trade is near $2,000 from here, from this point to this point. It's a lot of money, and you don't want to be too greedy. If you make that trade, get out. You don't want to be greedy and have to be. I mean, even if you let it rode out, you're still not going to be stopped out because you have a good entry position. You had good confluences on that entry. But even so, you don't know what the market's going to do. If I erase this one side of the, if I erase like this right here and just show you this green big ass fair value, like inverse fair value gap candle towards the bullish upside, you'd be scared. You'd be thinking like, holy fucking shit, like this might just inverse on me. It might just go for another high, which I've seen multiple times. And this is why, you take profit where you can, because you don't know what the market's going to do. You don't try to predict it. You just try to go off probability and take TP where you can. And that's how, you become consistently profitable. So, what are the confluences I need to know? Fair value gap, inverse fair value gap, break of structure, liquidity sweep, confirmation and retest, high time frame bias, low time frame entry, and change of character and order blocks. I don't really dabble too much into change of character or order blocks, but I understand how they work, so it's good to have a good understanding. What do I mean by high time frame bias? Well, if you look at the market, all right, there's going to be a bias towards what side it really wants to go towards. So what is the high time frame bias on this the last 2 weeks or some shit? I don't know. What's October 25th? Just like a month. There's like a month's worth of high time frame bias, but maybe you won't be using all of that. So this right here this was like 2 weeks ago, all right? So from this one to 2 weeks, there was a clear, bearish market. But, there is still some retracing. So you're going to have days where it's going to dump and you're going to have days where it's going to go back up. But if you see a good setup with, a bearish trade, I would take it. The high time frame bias doesn't always mean that that day is going to be in that direction. But, most of the time, if you're following a trend line and trading on the trend line, you're going to be profitable. I feel like there is a trend line, and if you can follow it, there's always opportunities to hit a good trade in every market. I mean, even with this bullshit ass market today on Thanksgiving, yeah, there was no confluences, but if you really were just betting and gambling off of fucking fair value gaps, then good for you, So yeah. And before I end this video, I still want to cover, well, I guess I already did cover most of what it means. I'll just kind of tell you, the people watching, what these are. Okay, fair value gaps. They're just these big candles. All right, that's the easiest way I can describe it. It's just like a big candle that it's just an imbalance of price, which means, okay, there's a ton of buys, so now it's just going up. That's what a fair value gap is. Or with this red one, let me get rid of all these structures so we can see clearly. I like this red one right here. Okay, well, there's a big imbalance of sell in price right now. People are selling. Okay, let's sell. Yeah. I mean, that's just kind of how I started learning. Okay, I see a fair value gap. Oh, let's press sell. Oh, I made money. Nice. Fair value gap size doesn't always mean it's going to work. There could be super volatile markets where, it'll open with consolidation and then just fuck you in the ass. So, you gotta watch out for that. You'll see this candle next to this candle. You think oh shit, it's market opens. You see this big bearish fair value gap candle. Oh, it's gonna go down, and then it just reverses with you on this big green one, this big green bullish fair value gap candle. And if you truly don't know what bullish or bearish means, bullish just means going up, or the green candles, and going down is bearish, which would be the red candles. So that's just what it means. Liquidity sweep. Liquidity rests at the highs and low of each session. So if I had liquidity right here, this would be where liquidity rests, right here. And liquidity would also be resting down here. A lot of time price action targets liquidity. So, if it sweeps a high liquidity, what is it going to go for now? Now it grabbed all the money up here. Liquidity is where money rests. It grabbed all the money up here, and now it wants to go grab the money down here, right? I don't know what it swept down here, but It swept just previous sessions, I guess. This it swept New York AM high. That's what it swept. See this? Yeah, this purple high. Yeah, it was targeting that, I guess. So it swept liquidity at the high, swept the money up here. Now it wants to go grab money down here. That's what liquidity is, and a liquidity sweep is just grabbing it and either reversing or just entirely going, like, continuing to be going in the direction it was originally going. So for example, if I have a liquidity sweep up high and then it just continued to just oh oh it just continued to keep on going up. I know that's not a candle, okay, I get it, but what I'm saying is, like, the structure of it is what matters. If it keeps on going up, it keeps on getting retested and the retest is failing, then that's how you know, okay, there's a bigger structure, you have liquidity grab or sweep high, whatever you want to call it. And now you just have the fair value gap being retested and confirmed, valid. So, you know, that's all the confluences you really need. And yeah, just make sure you wait for confirmation. If you know, for both sides, wait for that retest, and if it fails, then you know you can enter. You never want to enter too early, because if you do, then you're just gambling. You know, you need confluences and confirmation. But yeah, same could be said about the downside. Wait for confirmation right here. Enter right here. Take profit somewhere down here. Amazing setup. Have I explained breakup structure yet? Yeah, I have. Okay, confirmation and retest. This right here is a confirmation and retest. This is candles that fail to inverse the change of character, meaning that, okay, it's starting to become a bearish candle. It just invalidated this 5-minute candle right here. Let's enter, and now it's just gonna go down. That's amazing. Okay, well, I think I pretty much explained it. You know, I doubt anybody's gonna be watching this video, but if you are, if you go back to this and I'm blown up on YouTube or some shit, maybe I'll explain it better when I've had more experience. But this is the knowledge that I've learned, and this is really what's just been working out for me. I mean, I'm pretty sure I use some ICT, I use some SMT stuff. Like, this is probably their stuff. I just never like went through a YouTube tutorial learning from them personally. I mean, I've watched a couple TJR videos. I watched like the first day of his boot camp, but at the end of the day, I never really like sat through taking notes. I think I just jumped straight into paper trading and like just kind of just winged it from there and just figured it out. So this is my explanation of what a fair value gap and inverse fair value gap is, a bit of structure, a liquidity sweep, a confirmation and retest, a high time frame bias, and a low time frame entry. Change of character in order blocks, I can't really explain. Oh, I can. Like, for example, this right here would be an order block. So if price wants to retest it and it fails to go through it, okay, that's how you know it's gonna keep on ballooning up. Or a change of character would just be like the character inversing. It's literally just an inverse fair value gap. That's what it is. But yeah. So yeah, I mean, I mainly use low time frames to entry because of the fact that you can see that retest happening and you can snipe your entry. But these 6 things are what, if you're beginning a day trade, I think are essential to understand, because no matter who you learn from, their strategies are probably going to revolve around these 6 things. So these are the basics. And I might go back to this video one day and be like, what the fuck was I even talking about? But you know, this is my understanding right now. So, yeah. Thank you for watching this video. I know it was long and I know I was rambling a bunch, but that's how you can understand the basics. Okay. I'll catch you guys in the next video.